and welcome to Insurance World TV, your premier insurance education YouTube channel. Here, knowledge meets coverage. Join us on a journey of understanding, empowerment, and securing your financial future. Let's decode the complexities of insurance together. Today, we're discussing a clause within property insurance policies that has the potential to modify the scope of your coverage significantly, the unoccupancy clause. If you've ever scratched your head over the term unoccupancy clause in your insurance policy, you're in the right place. This puzzling phrase, often buried in the fine print, can significantly impact you as a policyholder. The focus here is on the occupancy of your home, or, more specifically, the absence of it. Why? Because for insurance firms, it's all about risk management, and a vacant house can pose numerous potential issues, from theft to water damage. The unoccupancy clause directly addresses these risks and is critical to understanding how it alters your coverage. Now, don't be alarmed. You don't need to hold a law degree or be an insurance savant to grasp this. Together, we'll unravel the enigma of unoccupancy, illuminating their purpose and importance. So, without further ado, let's jump right into the mysterious world of the unoccupancy clause. But before we do, don't forget to subscribe, like our videos, and check us out on our website at insuranceworldtv.co.ke and across various social media platforms. Stay tuned! So, what exactly is this unoccupancy clause we're talking about? Well, let's break it down. The unoccupancy clause, in the simplest terms, is a provision in property insurance policies like domestic package policy or homeowners insurance policy that may limit or stop compensation if the property is vacant and unattended beyond a certain period of time. This period is usually defined in the policy document. In other words, any policy that has this clause will not pay any claim arising from theft or damage if the building is left unattended beyond the number of days stipulated in the policy. What does unoccupancy mean? For insurance purposes, an unoccupied property is a building that has no one living in it for a period of time. Even if the property is furnished and has items within it, if no one is actually living there, it is classed as unoccupied or empty. An exception to this rule occurs when a security guard is engaged to guard the house from outside on a 24-hour clock. Why does this clause exist, you might ask? Well, the rationale is pretty straightforward. When a house or property, whether residential or commercial, is occupied, the probability of preventing risks from occurring or reducing the severity of potential claims significantly increases. An occupied property acts as a deterrent against theft and burglary, effectively reducing the risk of such incidents. Furthermore, the presence of occupants significantly decreases the likelihood of water damage caused by pipe bursts, fire damage resulting from electrical malfunctions, or damage to contents due to pest infestations. Occupants are able to promptly address these issues, either preventing them entirely or minimizing their extent, thus contributing to the overall mitigation of potential damages. Unoccupied homes are at a higher risk for the above damages. Think about it. An empty house is more likely to be targeted by vandals or suffer unnoticed damage like leaking pipes or pest infestations. So how does this impact your insurance policy? If your house is unoccupied for a length of time specified in your policy and something happens, your insurer may not cover the damage. It's all in the fine print. Now that we've uncovered what the unoccupancy clause is, let's delve into why it's so crucial to understand. You're probably thinking, okay, I get what the unoccupancy clause is, but why should I care? Well, let's dive right into that. The unoccupancy clause plays a crucial role in your homeowner's insurance policy. It's not just a fancy term thrown in to make the paperwork look more complicated. This clause essentially dictates the terms of your coverage when your property is unoccupied beyond a certain period, typically defined in the policy document. If you're planning a long vacation or have a second home that sits vacant most of the year, this clause comes into play. Imagine coming back from your 3 months-long European tour to find a pipe burst in your home. Without understanding the unoccupancy clause, you might be expecting a full coverage. But alas, the clause can limit or even nullify your coverage, turning your dream vacation into a financial nightmare. Now you see why understanding the unoccupancy clause is so critical. But what happens if you don't abide by it? A wise person once said, "Prevention is better than cure." Knowing the risks associated with the unoccupancy clause, it's only logical to take preventive measures to mitigate these risks. But how does one do that? Let's explore some practical steps. First and foremost, be aware of the stipulated unoccupied duration in your policy. This duration varies from policy to policy, so make sure you're well informed. If you're planning to leave your home unoccupied for longer than allowed, contact your insurance company. They may offer unoccupied property insurance or an endorsement to your current policy, allowing you to extend the unoccupied duration. Secondly, consider having someone stay in your property while you're away. This could be a trusted friend, family member, or a professional house sitter. This not only helps you comply with the unoccupancy clause, but also ensures that potential damages are spotted and addressed promptly. Lastly, invest in preventative measures like home security systems or smart home devices. These can monitor your property for break-ins or hazards like fire and water leaks, even when you're miles away, providing an extra layer of protection. Remember, the unoccupancy clause isn't your enemy. It's a provision designed to protect both you and your insurer from potential risks. By understanding and taking steps to mitigate these risks, you can enjoy your time away from home without any lingering worries. Next, let's delve deeper into what happens when you ignore this clause. Ignoring the unoccupancy clause can lead to some serious consequences. Picture this. You're away on an extended vacation, leaving your home unoccupied. Suddenly, an unforeseen calamity occurs. A pipe bursts or a fire breaks out. You might assume your homeowner's insurance policy will cover the damage. But wait, if you've overlooked the unoccupancy clause and your home has been unoccupied beyond the stipulated duration, you could be in for a rude shock. Your claim might be denied, leaving you to shoulder the heavy financial burden of repairs or replacement. Furthermore, habitual non-compliance with the unoccupancy clause might lead insurers to consider you a high-risk client, which could result in higher premiums or even policy cancellation. It's a domino effect, one small oversight leading to a cascade of complications. So the next time you're reviewing your insurance policy, pay special attention to the unoccupancy clause. It could save you a lot of trouble in the future.